Hello, everybody. Welcome to Wednesday. The S&P 500 was down 0.27% today. Actually, it was quite an accomplishment today to end up there. We were down quite a bit more earlier in the morning. The CPI report came out today. It was hotter than expected. We were 3% year over year. So this January versus last January. And then month over month from December to January was actually up 0.5%. So if you take 0.5% times 12, you get 6%. So, on an annualized basis, that's a pretty hot reading, definitely more than expected. The last month's reading that we got really propelled the market forward and got it moving, in January for the last CPI report. Now, so because it was lower than expected. So, this the CPI report can actually be a bit more volatile as a whole. This is a consumer price index. It is not the index that the Fed looks at when they're talking about trying to get down to 2%. They look at the PCE, which is the personal consumption expenditure index, which comes out at the end of the month. But the market reacts to that. I'd say the thing that's striking to me about this market so far is that it's very resilient. Dip comes and then the markets kind of hold up and comes back up, and we've been holding in there quite nicely, still trading in kind of a range. In face of all these different things that are happening with the possibility of tariffs and whatnot, the market's actually pretty strong. I'm impressed altogether. We'll see if it continues to stay that way, but so far so good. Far as this time frame goes, and we look at what's going on here, I think the CPI report is a little bit troubling for the current administration in just that you already have an environment where inflation is bubbling a little bit. Even on the PCE inflation report, it's at 2.8% on the core. It's been roughly in that neighborhood since last May. So inflation is kind of sticky and hanging up there. It's not moving down like it was pretty consistently before May. And so you got an environment where you're trying to do tariffs potentially also, which may be inflationary themselves too. So it'll be a little bit of a handcuff situation, I think, just for what they're trying to do there as far as that goes. And of course, we're going to cut taxes. That makes the bond market nervous unless you have enough, savings to offset those cuts. So we'll see what they come up with. There seems to be a realization of that in Congress. They talked about trying to match that up to satisfy the financial markets. Those are the things we want to hear. So that they're not, ending up at the bond market that's falling apart, which eventually might bring down a stock market or what have you too. So, but it kind of complicates a little bit, what they're trying to do right now because we're already in this kind of tight scenario as far as inflation goes. So, we'll see what happens. Again, the CPI report is not the be all to end all report. That'll come here at the end of the month, but and that's probably why the market didn't overreact to it as far as that goes. But so not a terrible day, considering that we had an inflation report that was higher than expected, and that seems to be the key focus for the market itself is just inflation. Federal Reserve has come out and said they're higher for longer. It's probably going to be a little bit longer. The market is expecting only one rate cut this year, so it's not too easy to disappoint them as far as that goes. Probably could be zero, but I've been saying for a while that the main thing here is to try to fight inflation. There is some pressure politically to try to lower the interest rates. We'll see what happens there. Um, you know, uh, when you're raising tariffs, if you're lowering interest rates, that can help to offset some of that. So, I think that's the strategy there. I don't know if that's what's going to happen or not. We'll see what happens altogether as we come up on this. The current tariffs on steel and aluminum are set to start March 12th. So there's a little bit of wiggle room there, for them to decide on, whether we're really going to have these or not. And you have to take a look at the overall picture of tariffs. The aluminum and steel are important, but they're actually a fairly small amount of what we import in total. And so, they may not have a massive impact as far as that goes. So we'll see how that plays out. But anyway, look forward to talking to you tomorrow. Thank you.